back with another lesson here, and this time we're going to be going over Fibonacci retracement levels. Essentially what those are is they indicate support and resistance levels that are very, very likely to occur and typically always do. There's a lot of different ways to use them, but I'm going to show you this specific strategy that you can use on any ticker, any stock, any currency, cryptocurrency, anything, and they do work. So essentially what they tell you is it's a percentage of how much of a prior move the price has retraced. So here we're on Thinkorswim, and the way that we'll access our Fibonacci retracement drawing tool is down here at the bottom right. It's the way that I use it. Go to this active tool, and this little guy right here that looks like a percentage sign is your Fibonacci retracements. So in this strategy right here, we're looking at Microsoft today. We're after hours right now, but we're on a 5-minute chart. This is a 5-minute 5-day chart. And what you can do is typically after the first 30 minutes of trading, the direction of the stock and the way that it's going to go is typically decided. So what you can do to use Fibonacci to see your support and resistance throughout the day is go to that 10 o'clock mark, which is right here. So what we'll do on this, since we were very bullish in the morning on Microsoft, for this Fibonacci, we'll take the highest level in the first 30 minutes, click there, and then retrace it down to the lowest point in that first 30 minutes. So I have mine color coded just because aesthetically it's a lot more pleasing. On Thinkorswim, they're automatically red. If you want to change that, you can just right click on any one of them, hit edit properties, and you can go in here and change the colors and change the style or the width. And then you would just hit save as default and it'll stay that way automatically. But essentially what you can see here is we never went above this 100% line. So it really stayed here all day. But what you can use is entries and exit points. So let's say we're at this 78.6, right? We retrace down to this level and we see it break through. We can enter a short position here. And then once we get down to this 61.8 level, this is what's called the golden ratio. And that's why I have it in gold. That's where stocks always like to retrace to over and over again. It's a good idea to take profit here or take a little bit of profit here if you think that it might go down to the 50%. And then you can close out fully there. And if it comes back here, then just close out the position completely if it comes back into 618. But again, you can use these as support and resistance, and they'll typically stay around these lines. So if we go to Apple, I already have mine on here, but what's going on here? So let's delete this. So this is a little different case. As you can see, Microsoft, when it opened, was very bearish. We kind of sunk right after the market opened. So what we can do is take the lowest point after that first 30 minutes. So from 9:30 to 10 o'clock. So start there and then retrace up to the highest point. So as you can see here, this is a much better case of how Fibonacci's work throughout the day. As you can see, after the first 30 minutes, we started to settle down and consolidate between this 100% and the 78.6%. And then right as it actually broke through, it literally gapped down underneath this 100 level, right? We sunk all the way down to the 1618. And then all the way down, just touched the 2618. And then bounced back up to the 1618. Stocks typically have this attraction towards the 1618 and the 61.8. But it's really just a string of continuing indefinitely. So if I were to zoom out here and go to the 4-hour, right? That's a little bit too far. Let's say the 30-minute. As you can see, this goes all the way out to the 4.3, the 423.6, right? And you can always add more levels if you want to. I don't really see the reason to, but you can even do this on a longer period of time as well. So let's do Apple at its high, which is 515.98, down to 450.7. That's about right. All right, so as you can see, we kind of bounced off this 786 level until it broke through. We didn't get all the way down to the 618, but we're kind of bouncing in between this support right here, and that's the point that we're at right now. And a good thing to look for is overlapping fibs. So right here, you can't see any, but sometimes you'll have overlapping fibs, and those are key levels. We have this level right here, the 1618 and the 618, very close to each other. So I'm thinking Apple's probably going to stay around this level because, like I said, it typically likes to stay around the 618, 1618. But that's essentially how you can use Fibonacci on a daily basis on a 5-minute chart. So if we zoom back in on this one, it gives you your supports and your resistances for you, and it never leaves you guessing. And you can trade off of these. People do it. It's a self-fulfilling prophecy, and it's a really good way to capture profit. You know, entering as you see it going down to the next level or retracing to the next level, and then when you see it going back up to the next level, if you really want to day trade every single day, all day. But again, you can use these on a longer time frame as well if you plan on holding for a little bit longer to find your entry and exit points. So there's a quick intro to Fibonacci retracements and how you can use them on a daily level and how you can use them on even a 1 hour, 4 hour, or 1 month level even. So I'll be doing more videos about this. We'll be doing Fibonacci extensions and looking more into overlapping fibs, but just as a quick intro that you can use every single day after the first 30 minutes, setting up that chart is very vital, and it will help you out with your trading on when to take profit and when not to. Don't solely rely on Fibonacci. Obviously, use other indicators and what else is going on in the market, but I think it's a very vital tool to have that everyone should have. So again, I'll be making more videos about this, and if you liked this one, then just go ahead, give me a thumbs up, and I'll be happy to make more for you.